This is Pete Profit, and today I will show you a better way. A way to build wealth without stress, hype, or complicated strategies. If you feel investing is only for the wealthy, this will change everything. I am not talking about risky trades or chasing viral stock tips. I am talking about a simple system that quietly builds income over time. With just $25 per week, you can begin today. Over time, this can become thousands in monthly passive income. Yes, that is possible with discipline, patience, and the right strategy. Stay with me, because this approach can reshape your financial future. This is Pete Profit, and this is how long-term wealth is built. Let me start with one fundamental truth about money and success. Nothing meaningful happens without a clear plan and consistent execution. Businesses do not grow accidentally, and wealth is never created randomly. Yet most people invest emotionally, reacting to fear and short-term excitement. That approach almost always leads to losses, frustration, and financial stagnation. Instead, I follow a structured system based on long-term principles. My goal is simple and focused on lasting financial independence. I want monthly income that continues even when I stop working. I want money working for me instead of trading my time endlessly. But here is the reality for most people starting their journey. You may not have thousands of dollars ready to invest today. You might only have $25 per week available. That does not disqualify you from building serious wealth. In fact, it becomes your greatest long-term advantage, because small, consistent actions outperform large, inconsistent efforts over time. This is where the DRIP strategy becomes incredibly powerful. DRIP stands for Dividend Reinvestment Plan. It is one of the most effective wealth-building methods available today. The concept is simple, yet the results can be extraordinary. Instead of spending dividends, you automatically reinvest them into more shares. Those new shares then generate their own dividends. Those dividends are also reinvested, repeating the cycle endlessly. This creates a compounding engine that grows faster every year. Think of it like planting a seed that becomes a forest. At first, growth appears slow and almost insignificant. But with time, the momentum becomes unstoppable. This is not about getting rich quickly. This is about building a system that produces income for decades. Let me explain exactly how this works in practice. Imagine you own shares in a dividend-paying company. Most investors take the dividends and spend the money immediately. That feels good today, but limits growth tomorrow. Instead, I reinvest every dividend payment automatically. Each payment buys additional shares of the same investment. Now I own more shares than I did before. More shares means larger dividend payments in the future. Those larger dividends are reinvested again. This creates a powerful snowball effect over time. One of the greatest strengths of this approach is compounding. Compounding does not grow in straight lines. It accelerates, multiplying your results year after year. Each reinvestment increases the base for future returns. That is why long-term investors consistently outperform short-term traders. Let me show you with a simple numerical example. Suppose a stock costs $20 per share. You own 100 shares worth $2,000 total. That company pays $1 annually per share. At year-end, you receive $100 in dividends. If you spend it, your investment stays exactly the same. If you reinvest, you buy 5 additional shares. Now you own 105 shares instead. Next year, you receive $105 in dividends. Reinvest again, and your ownership increases even further. Every year, both your income and your asset base grow. This is the engine behind long-term financial independence. Another powerful advantage of this strategy is dollar-cost averaging. Most people try to time the market perfectly. They wait for the best entry point, often missing opportunities. Dollar-cost averaging removes emotion and guesswork from investing. You invest the same amount regularly, regardless of market conditions. When prices are high, your money buys fewer shares. When prices are low, your money buys more shares. Over time, your average purchase price becomes more balanced. This reduces risk and protects you from emotional decisions. DRIP also provides automation and long-term consistency. Once set up, the system runs in the background. You do not need to manually reinvest every dividend payment. You do not need to monitor markets every single day. Your strategy executes itself with discipline and precision. This is not just convenient, it is strategically superior. because consistency is the most important factor in investing success. Now, let me show you how I improve the standard drip approach. This is Pete Profit's enhanced long-term investing method. In addition to reinvesting dividends, I invest a fixed weekly amount. For this example, I invest $25 every single week. That equals $100 per month or $1,200 annually. It may not sound impressive at first glance. That is why most people underestimate its long-term impact. Small amounts, invested consistently, create extraordinary outcomes over time. Every weekly contribution purchases additional income-producing assets. Those assets immediately begin generating dividends. Those dividends are reinvested, compounding the effect further. This accelerates growth far beyond irregular or emotional investing. Weekly contributions also strengthen dollar-cost averaging benefits. You are investing during both market highs and market lows. You are not guessing, reacting, or chasing trends. You are executing a disciplined financial plan. Because the amount is manageable, the strategy becomes sustainable. The key is not how much you invest once. The key is how long you remain consistent and disciplined. By combining weekly investing with dividend reinvestment, you build a system, not just a portfolio, but a long-term income machine. Now we must address something even more important. Your results depend entirely on the assets you choose. Not all dividend stocks are created equal. Over time, I identified 4 essential categories for reliable results. These categories create balance, growth, stability, and income. First, we have blue-chip dividend stocks. These are large, established companies with long records of reliability. They provide stability, consistency, and dependable dividend payments. Examples include Coca-Cola, Johnson & Johnson, and Procter & Gamble. These businesses survive recessions and dominate their industries. They form the foundation of any long-term income portfolio. Second, we have dividend aristocrats. These companies have increased dividends for at least 25 consecutive years. That demonstrates financial discipline and commitment to shareholders. Examples include AT&T, ExxonMobil, and Walmart. Dividend aristocrats rarely cut dividends because their reputation depends on consistency. They provide long-term stability and predictable income growth. Third, we have high-yield dividend stocks. These stocks pay higher than average dividend income. They are useful for increasing portfolio cash flow. Examples include Realty Income, Altria Group, and Verizon Communications. They may carry slightly higher risk, but offer stronger income. When used properly, they enhance overall portfolio yield. Fourth, we have growth-oriented dividend stocks. These combine rising share prices with increasing dividend payments. Examples include Microsoft, Apple, and Visa. They may start with lower yields, but grow rapidly over time. They're increasing earnings support, rising dividends, and long-term appreciation. When selecting investments, I look for companies meeting 3 criteria. Income, stability, growth, and financial strength must be present. Using this framework, I constructed a sample long-term portfolio. This portfolio demonstrates how the strategy works in practice. It includes NextEra Energy, Starbucks, Abbott Laboratories, and Home Depot. It also includes a Dividend Aristocrats exchange-traded fund. Each investment was evaluated using yield, growth, and appreciation metrics. NextEra Energy offers solid yield with strong dividend growth. Starbucks provides brand strength, expansion potential, and consistent dividend increases. Abbott Laboratories delivers stability, healthcare exposure, and reliable dividend performance. Home Depot offers strong earnings growth and increasing shareholder payouts. The Dividend Aristocrats Fund adds diversification and proven dividend consistency. When combined, these investments produce impressive portfolio characteristics. The average dividend yield is approximately 2.5%. The average dividend growth rate exceeds 15% annually. The average share price appreciation approaches 11% yearly. These numbers matter more than most investors realize. They determine how quickly your wealth and income can grow. Now let me answer the most important question directly. Can this strategy realistically support retirement income? Let us examine the projected long-term results. If Pete Profit invests $25 per week consistently, that equals $1,200 invested each year. At the end of year 1, the portfolio reaches approximately $2,500. This includes contributions, growth, and reinvested dividends. After 10 years of disciplined investing, the portfolio exceeds $27,000. After 20 years, the value approaches $145,000. After 30 years, the portfolio has potential to exceed $800,000. But the most powerful result is not just portfolio value, it is the income this portfolio can generate every month. At that level, annual dividend income exceeds $63,000. That equals more than $5,000 every single month. Income that does not require trading time for money. Income that continues whether you work or not. Much of this growth comes from reinvested dividends alone, not from market timing, speculation, or risky strategies, but from consistent contributions and disciplined compounding over decades. This is how small weekly investments become life-changing wealth. This is not a shortcut or overnight success story. This is a proven path toward financial independence. If you are willing to be patient and consistent, results follow. This is Pete Profit, and my mission is financial empowerment. My goal is to help you build systems that work for you. Start with what you can afford today. Commit to consistency, not perfection. Reinvest relentlessly and trust the long-term process. Let time become your greatest financial ally. If you want to build your own dividend engine, continue watching. Your future wealth begins with the next disciplined financial decision. Thanks for watching, and I will see you in the next video.